U.S. stocks ended the year on a down note Wednesday. The Dow fell about 0.6%, while the S&P 500 and Nasdaq dropped about 0.75% each. However, for 2025, the Dow added about 13%, the S&P 500 climbed 16.4%, and the Nasdaq jumped 20.4%. The major indexes advanced by double digits for the third consecutive year, a run last seen during 2019 to 2021. Wall Street made a stellar comeback from April's lows, when Trump's Liberation Day tariff sparked a meltdown in global markets, sent investors away from U.S. stocks, and threatened growth by clouding the interest rate outlook. A rally in AI-related shares drove stocks higher, with bellwether chipmaker Nvidia up 39% year-to-date, becoming the first publicly traded company to hit a $5 trillion market valuation. Dennis Fulmer, Chief Investment Officer with Montes Financial, says he thinks these technology stocks are in a bubble, but it may not deflate for a couple of more years.
This whole year has been sort of what I call a low-quality rally where speculation in a lot of places has won out over profitability and earnings. So I think there's definitely some undeniable signs of market euphoria. That doesn't mean it can't last for another couple of years. But I think what it does mean is that price matters. The price you pay for an investment matters. So, history would tell us that if we're buying the S&P 500 at these current valuations, we really shouldn't be expecting to see a lot in terms of returns for the next 5 or 10 years.
Stocks on the move Wednesday included Nike, which gained 4% after an SEC filing showed CEO Elliott Hill bought about $1 million of stock on Monday. And Vanda Pharmaceuticals surged 25.5% after the U.S. Food and Drug Administration approved its drug for the prevention of motion-induced vomiting.